Hey guys, it's Wayne at DMI Finance here. Sorry I can't be with you in person tonight. Hopefully me virtually will be just as good for you today. But of course I'll be back with you next month for my usual live slot. I've a short and sweet market update for you today, as I normally provide, plus of course a breakdown of the rates that are currently available in the market, or headline rates that are currently available in the market. Normally I'd offer myself open to questions, but of course I'm not there, so I can't do that this time around. But I'll pop a slide up at the end of the presentation with my contact details, and do feel free to get in touch if you've got any questions from a kind of mortgage or finance related perspective. Without further ado, let's go through the presentation. So guys, most of you know who I am. As I say, I'm Wayne at DMI Finance. I'm the MD of DMI Finance. We're an independent mortgage brokerage specializing in arranging all forms of finance for property investors, simple buy-to-lets, HMOs, commercial development, bridging finance, residential mortgages, anything effectively, any form of finance that an investor would want to get involved with a particular focus on completing quickly, fast, efficient, and we do an awful lot with property auctions nationally. So that's a whistle-stop tour of DMI. Now on to the good stuff, which is the mortgage market update and the rates. So there we go. So mortgage market news. So what's happening, or what's happened since we last caught up? I guess pretty monumental, really, is that it's buy-to-let's birthday, 25th birthday this year, in fact, this week. So cast your mind back to 1996 when we had, Badil and Skinner, Three Lions. We had Charles and Diana divorcing. We had Spice Girls' debut album, Wannabe. What else did we have? John Major as the Prime Minister, a long time ago. I was only 9. Don't remember buy-to-let coming out in truth, but I do remember it for the last 15 or so years. But yeah, happy birthday to buy-to-let. When it came out 25 years ago, we had 2 lenders in the market offering it. From what I understand, Paragon Mortgages were the first entrant, followed swiftly by NatWest Bank. So those 2 lenders were the only 2 lenders from its inception offering traditional buy-to-let mortgage products. Both of those lenders still remain pretty active, in fact, very active today. And as you'll see when I go on, both have some pretty competitive propositions currently. So start with the first point here, Paragon Bank. Paragon Bank, a couple of weeks ago, unfortunately, they withdrew some really competitive market-leading products. So the Friday before last, they withdrew these products. It was a real shame because they were very competitive. However, the following week, they brought out more competitive limited company products, lower interest rates than the rates before, free valuations, £750 cashback. I mean, really stonking products, really competitive products, both available for single dwellings, HMO, and multi-unit freehold blocks. So these rates are starting at, and you'll see on the next screen, but starting at 2.65 for a limited company HMO or multi-unit freehold block. I mean, they're really competitive products. But we've seen rate reductions from many banks in recent weeks, and this kind of goes against the grain because we are seeing rising inflation, but banks are very keen to lend. We've not seen significant criteria changes necessarily, but we have seen lots and lots of rate reductions, and that's where they're just trying to vie for a little bit of business, a little bit more business from taking it away from other lenders effectively. So we've seen probably upwards of a dozen normal lenders reduce their rates. Notably, NatWest have reduced their rates by up to 1.46%. 1.46%. It's huge. and that's on a 75% loan to value range. So, you know, that might be, again, like Paragon, first two entrants into buy-to-let, 25th anniversary. It might be something surrounding that. It might not last too long, but nevertheless, it's well, it's a very competitively priced product. As I say, we've seen lots of other lenders, you know, your Virgin Moneys, Godivas, TMWs, your Precise, Fleet, Keystone, Vida, you know, you name them, they've probably reduced rates in the last few weeks, which is very, very competitive. On top of that, we've seen some changes with some of the challenger lenders. So we've seen the likes of Hampshire Trust Bank. Now, Hampshire Trust Bank, I'm not sure if I've really mentioned them on NPN webinar before. They are one particular lender that we use quite frequently, often for semi-commercial assets. So people buying a property of mixed use, it's got a commercial aspect, it's got a residential aspect. They're very competitively priced in that sector, but they'll often, I mean, we use them an awful lot for foreign nationals buying in the UK. We use them an awful lot for expats buying in the UK. They're a very competitively natured lender. Their rates aren't as competitive as a true high street lender, or indeed, you know, a specialist buy-to-let lender, but they've reduced their rates by up to 0.2%. Shawbrook Bank, someone that, or a lender that many of you will have known or heard about, will know about or have heard about, they've reduced their rates by 0.6%, which I think is a pretty significant rate drop. And what they've done is they've introduced a streamlined buy-to-let product for simple buy-to-let, so single dwellings for non-portfolio landlords. So that's a landlord with 4 or less than 4 mortgaged properties. But they've brought out a product where it's specifically for those properties that will benefit from an automated valuation. So the whole process from start of application to offer can be exceptionally quick. They can lend on it without a physical valuation if the automated valuation comes in on target. But that's what this product's for. It's for automated valuations. It's for easy business. It's for simple business, for non-portfolio landlords on single dwellings. I think the rate is 75% loan to value at a 5-year rate of 3.69 or 3.79, something like that, in around that region. But as I say, it's not impossible. I mean, we've seen offers come out on that product very, very quickly, perhaps 3 days, maybe even less. It's a really competitive product if speed is of the essence. Another interesting point is holiday let products. Holiday let products have more than doubled in less than a year. We had, what did we have? I think it was 74 products this time last year. We've now got 186 products this time this year. Previously, I think it was offered by 11 lenders. Now we're being offered it by 25 lenders. So it's a really buoyant market from a lending perspective for holiday let propositions. Rates are priced a little bit less competitively than your average buy-to-let. I think the average holiday let product is coming in around about 3.5% per annum. But what you lose in interest rate, of course, you gain in the revenue accordingly. So yeah, I mean, there's not a tremendous, as I say, amount of criteria changes. Criteria hasn't really changed. We've not seen lenders come in and say, I tell you what, we'll offer a lower loan to value. A higher loan to value. We'll offer lower loan sizes. We'll offer on properties that we weren't willing to offer on a month ago. That really hasn't happened. What really has happened is the drive to bring in more business, and I think they've done that in one clear way, and that's in rate reductions. So yeah, in light of the rate of inflation, lenders are still very keen to lend. Criteria changes have been minimal, but rate reductions across the board. If we look at the headline rates as of today, guys, they're very, very competitively priced. If I just very quickly run through them for you, we've got 2-year fixed at 1.35% for personal name. Now that's, I think when we looked last time, I haven't got the presentation in front of me. I think it was about 1.55, something like that. It's dropped. It's dropped a reasonable amount. 2-year fixed for limited company or SPVs on a single kind of standard dwelling is lowest rate is 2.59. Then we go on to that Paragon rate that I was saying before, that limited edition, probably in light of their kind of 25th or the 25th anniversary of buy-to-let, 2.65% for HMOs and multi-unit freehold blocks. I mean, it really is an incredibly priced product. It comes with a £750 cashback, free valuation, very, very a clear-cut winner in my book for many instances. We then move on to more simple security, personal name, standard buy-to-let 5-year fixed rates. That's coming in around about 1.75%. I think last time we were meeting it was around about 1.9%, so that's quite a reasonable drop too. And then the following two rates there again are complements of Paragon mortgages, 5-year fixed, both for limited companies on standard dwellings, as well as HMOs and multi-unit freehold blocks, 75% LTV at 2.99%. So, staying beneath that 3% mark, again with the 750 cashback, again with the free valuation. So yeah, really quite competitive rates in the market at the moment. They're not for everyone. Some people won't be eligible for Paragon, some people won't have the experience. But whilst these are headline rates, guys, the rates that follow these are not much more. So if you don't meet Paragon, don't think, oh crikey, now I'm going to be paying 4% or whatever. You'll be paying fractionally more. So Paragon are at the top with some of these rates and some of the other lenders at the top. But if you don't match their criteria, there will be something there that will sit pretty much just behind it, offering something just as competitive. Guys, I'll leave this screen very quickly just while I say my goodbyes, but any questions, reach out to me, reach out to the team. I'll be back in the office tomorrow, Thursday, and of course Friday, but you can speak to me, you can speak to any of the team. There's our contact details. Thank you very much, and enjoy Jeanette's presentation. Thanks everyone. I'll speak to you soon. Thanks very much. Take care. Bye-bye.